Hello guys and welcome to the channel. Since we started this series of videos on price patterns or on how you can use price patterns to come out with solid signals in forex trading, the videos have been going crazily viral. Why? Because people have been able to see the reason why they've been losing in their forex market, in their forex trade, or they've been able to see the reason why they've been blowing their accounts, because I'm revealing all of that information on this forex video. So with that being said, we want to be able to cover another very spectacular price pattern in forex trading, which is known as the rectangular chart pattern. Hello everyone and welcome to my channel. My name is Ndela, and on this channel we talk everything about trading, business, crypto, forex, and tips to help you stay profitable as a forex trader. So if this is your first time coming to my channel, please consider hitting the subscribe button below so that you can always be updated once I come up with awesome content like this. So without taking much of your time, let's see what we're going to be covering on today's video. So on today's video, we're just going to be talking about one structure which can give you a lot of signals in forex trading, which is known as the rectangular. You guys already know what is called a rectangle, right? A rectangular price, a rectangular chart pattern. A rectangle just looks like this, right? That is a rectangle. So there becomes a point in forex trading where your chart will produce this over and over and over again. If you go back and do back testing, you will see this kind of structures where the market just keep bouncing on this structure over and over. You will see it over and over. So how can you be able to trade this? So we want to cover that on today's video. So they say it is a period of consolidation or indecision between buyers and sellers. This is an example of a triangular pattern. You see the market going up. Then after a sudden, it start bouncing, it start having the same levels. The market is bouncing on the same levels or the same zones, all right? The market is bouncing on the same zones. If I have to close this zone here and close this zone here, what does it form? It forms a rectangle, all right? It forms a rectangle. That is why it is called a rectangular price pattern or a rectangular chart pattern. It's the same thing. This is a bullish rectangle where the market is going up. A bullish rectangle is just when the market is going up, then you see this forming. So it becomes a bullish rectangle. Then if the market is falling, then out of a sudden you see this forming. It forms what? It forms a bearish rectangle where the market is going down. Then after a sudden you start seeing consolidation, the market hitting the same zones. If I link this and link, it forms a rectangle, but it was on a bullish trend, so it becomes a bullish rectangle. All right. So that is just an example of what we call a rectangular structure in forex trading. Then the price can break on any side of the rectangle as the buyers or sellers can win the battle. As easy as that. Since we are testing support and resistance here, since here we are hitting on support and resistance, and this can just be an impulse. Remember, this is not a reversal signal. This is what we call a dual signal indicator, all right? It can either cause a trend continuation or it can cause a trend reversal, all right? So here, the market can break in either direction. After this consolidation, after testing this area, the market can break up as you see. The market can break up as it can still come down here and break down. So the market can break in either direction. So when you are trading this, you should be able to have structures or you should be able to have strategies that can allow you to catch the move. If the market is broken in any direction, you should be able to still catch the move, all right? So the market can break in any direction. The same thing will happen here. Though the market is going down, after this impulse or after this pause, the market can gain momentum to continue going in the downward direction if supply is still more than demand, if the sellers are still winning the battle, if selling pressure is still more than buying pressure, the market will continue falling. But if at any point in time the demand for that particular currency pair becomes more than the supply, the market can actually break up here and reverse. So that you can actually see a reverse in the market direction, all right? So that is an example of a rectangular pattern. So how do you trade? How do you trade a rectangular price pattern? We have two ways. Here on my screen, you can say the bounce. You can use two methods to trade the rectangular price pattern. You can see they say the bounce method for inner rectangular trading, the break and retest method once the rectangle is broken. Let me explain this to you. Here on the rectangular price pattern, you can use two methods. The market is bouncing on support and resistance. Whether we are talking of a bearish rectangle or a bullish rectangle, it will obviously form this, all right? Where the market is bouncing on support and resistance. All right, so anytime where you see the market is bouncing on support and resistance, there are two methods you can use to trade this particular structure. You can, to trade the inner trading, what we call inner trading, where you are trading, you are trading between, you are predicting between support and resistance level. All right, so you use what we call the bounce method. The bounce method. I already have a video that explains very clearly the bounce method of forex trading. So if you for any reason miss that particular video, then please you need to go back and watch that video. All right, so you can use the bounce method where at any point the market hit your support, you buy. At any point the market hits your resistance, you sell. At any point the market hit your support, you buy. So you buy here, and you sell here, and you sell here. So that method is called the bounce method. All right, that is for inner trading, where you are trading, where you are doing inner trading. But at the same time, you should be able to have a precaution or a structure in place that will allow you to trade if this market is broken, because it's not going to be. You can see this is now MT5. This is an example of MT5. I took this screenshot from my MT5. Here we have our resistance, and here we have our support. The market has been bouncing on support and resistance, and it's not going to bounce like this forever. Now, I made a lot of money from this same structure. I remember this was Great Britain Pound USD. I took this chart from Great Britain Pound USD. I was only just buying here, selling here, buying here, selling here, buying here, and selling here. All right. So before I took this screenshot, the current market price was at my resistance, and I think I already saw on that particular position. But at the same time, what happens if this market doesn't continue going down? What happens if it gets to this particular level and this level is broken? What will I do? So if this level is broken, what I'll do is I'll wait for the market to come back here and retest. Once the market comes back here and retest, that is where I'll buy. All right. Once the market comes back and retests my particular resistance, if it's broken, if the resistance is broken, that is where I'll buy. And if the market is broken down here, I'll wait for the market to come back and retest my support. Once the market comes back and retests my support, that is where I will sell. And once I sell there, my stop loss will go above that area, and my take profit will be 2x arrow. So if you are risking 20 pips, your take profit must be 40 pips. If you are risking 50 pips or $50, your take profit must be 100 pips or $100. Never for once in your life, take a trade which has a risk to reward of at least 1:2. Your trade must have a risk to reward of at least 1:2. So that is it. You can either trade with what we call the bounce method, where you wait for the market to bounce on support and resistance. You're always buying on support and selling on your resistance, or you wait for the market. If the market actually breaks that structure, because it's going to break that structure at a point in time, it's not going to be bouncing like this forever. So, but if the structure is broken, don't hurry, because that can be a fakey, what we call a fakey or a fake out. There can be a fake out where the market breaks down structure, where market makers actually do that on what we call stop loss hunting. Market makers can do that, where you think, okay, the structure is broken, then you run to go and buy, and then the market will again pull back against you and go in your intended direction. So that one is called stop loss hunting. So you need to also have a structure in place. So to be able to avoid that, to be able to trade to avoid that, always use the retest method if the structure is broken. If the structure is broken, just sit on the stand on the sideline and just watch. If the market comes up to that level and retest, that is where. If the market broke here and is going up, don't worry. Don't suffer from the fear of missing out, from FOMO. Sit and wait. If the market comes back here and retests here, that is where you buy somewhere here. Your stop loss will go somewhere here, and your take profit, your TP will be equal to 2 arrow. Your TP should be 2 times your risk. So with that being said, let me see if we still have anything on this particular one. Good. So with that being said, we've come to the end of this short pattern, which is known as a rectangular pattern. Please go back to your MT5 and do your back testing. Go back to your broker or to your platform and do your back testing. You will see a lot of structures that you can be, a lot of signals that you can be able to generate using all of this pattern. All right. So if you want to join a community of forex traders that are sharing ideas on a daily basis, please check the link on the video description to join my Telegram channel. And if you want the best broker, I keep saying this every day. You might know how to trade, you might know how to do everything, but if you don't have the right tool, you won't be able to make money. So if you want to use the same broker I use, check the description on the video so that you can be able to sign up with the same broker I use. And then if you haven't watched this video, which explains very clearly the bounce and break structure, then please watch this video. And if you haven't watched the whole playlist, watch this playlist to be able to watch the videos on this playlist. And if you like the way I teach, please consider hitting this button to subscribe to the channel. Till then, I'll see you guys on the next video. Peace.